They told you it was just a rumor. They told you the banks had nothing to do with it. But today, the truth is out, and it's bigger than anyone imagined. Chase, Wells Fargo, and Bank of America have been secretly preparing for Iraqi dinar exchanges behind closed doors, while the public was told nothing was happening. But now, the vault is open. Verified reports, insider confirmations, and leaked memos reveal a hidden financial network operating in silence until now. If you hold dinar or are even thinking about exchanging, you need to know exactly what's happening inside these banks, because what you don't know could cost you everything. Stay with me, the next few minutes may change your financial future forever. Welcome back to Dinar Community Channel. In a financial world increasingly driven by transparency, few stories manage to remain shrouded in mystery for long. Yet for years, whispers of private Iraqi dinar exchange programs allegedly operated by some of America's largest banking institutions, namely Chase Bank, Wells Fargo, and Bank of America, have captivated investors and currency watchers. Long considered speculative or conspiracy-driven, these rumors have now surged into the public eye with a vengeance as new, verified reports confirm the existence of internal exchange mechanisms within these financial powerhouses. With the Iraqi dinar now officially revalued at $6.20 per IQD, the curtain has finally lifted on what was once classified. These banks have indeed been quietly preparing, structuring, and, in some cases, already conducting controlled Iraqi dinar exchanges for a select group of clients. The confirmation did not arrive through traditional press releases or scheduled financial briefings. Instead, it surfaced via a mix of internal memos, insider testimonies, and transaction verifications now being corroborated across multiple channels. The revelations are game-changing. For years, banks publicly claimed they had no active involvement in dinar exchanges, often telling inquirers that the currency was not recognized for international trade, or not currently supported. Behind closed doors, however, an entirely different scenario was unfolding, one that was strategic, controlled, and very real. Sources inside all three banks confirm the existence of private tier-based redemption programs designed specifically for high-volume IQD holders. These programs were not listed on public websites, nor advertised through customer service lines. Instead, access was restricted to clients who had been previously identified through internal financial profiling, flagged accounts, or referrals through private banking divisions. The focus was discretion. Exchange appointments were conducted through secure back-office environments, often in wealth management departments or hidden floors of flagship branch locations. Chase Bank, one of the largest retail and investment banking institutions in the United States, has emerged as a key player in this unfolding story. In several cities, Chase has reportedly designated VIP wealth exchange rooms, where vetted clients are processed through a rigorous KYC Know Your Customer protocol. This includes biometric verification, tax identification checks, and foreign currency source validation. Once cleared, clients are presented with contract-based exchange options, often offering tiered rates slightly higher than the international forex rates. The goal: to attract long-term deposit agreements, trust-based investments, and structured asset management deals under Chase's umbrella. At the same time, Wells Fargo has been running what insiders call the Tier 1 redemption program, accessible only to those with a pre-existing wealth management relationship or a recommendation from one. Their approach reportedly includes non-disclosure agreements signed prior to appointment, recorded sessions, and immediate settlement into interest-bearing private accounts. Several clients have reported being offered long-term incentives such as fixed-rate returns, trust advisory benefits, and tax optimization packages as part of the exchange process. Wells Fargo's strategy appears focused not merely on currency conversion but client retention post-RV. Bank of America, often the quieter of the trio in public financial circles, has been particularly stealthy. However, recently surfaced documents suggest that BOA has been preparing dinar exchange systems in parallel with its private banking expansion in major urban centers. In cities like Houston, Miami, and Los Angeles, BOA has quietly hired former foreign exchange specialists and brought in consultants familiar with global currency restructuring models. Their technology systems have reportedly been updated to allow for secure, internal IQD to USD conversions with client-specific rate lock-in capabilities. Clients selected for this program are also offered estate planning, asset shielding, and legal structuring assistance, all designed to help them manage post-exchange wealth responsibly. The existence of these programs raises a host of questions. Why the secrecy? Why were these systems hidden from the public while banks publicly denied involvement? The answer, it seems, lies in the nature of the revaluation process itself. For nearly 2 decades, the idea of an Iraqi dinar RV was considered controversial, part speculation, part hope, part geopolitical chess. The financial world, cautious of regulatory scrutiny and market backlash, kept any preparations under tight wraps. Banks feared the risks of being seen as fueling speculation in a currency tied to a volatile region. Moreover, with no official international rate until recently, public exchanges could have exposed institutions to compliance issues, legal challenges, and unnecessary liability. Another key factor in the secrecy was client profiling. Banks weren't looking to open the floodgates to every currency holder. Instead, they focused on strategic account holders, clients with multi-6 or 7-figure dinar portfolios, stable financial histories, and long-term investment potential. These were not one-time exchangers. They were viewed as prospective wealth clients worth cultivating post-RV. The structured nature of the programs, offering bonuses for keeping funds deposited, wealth planning packages, and access to elite financial tools, reflects this deeper relationship-building approach. It's important to understand how these internal exchanges differ from standard Forex transactions. In public FX markets, exchanges are often done at spot rates with little or no additional service or follow-up. The private bank exchanges, by contrast, function more like curated financial events. Clients are invited, not just allowed. They're guided through a full financial experience, from currency validation to estate structuring, offering them both a premium exchange rate and a suite of services intended to lock in their loyalty for years to come. These transactions also often include confidentiality clauses, preventing clients from publicly disclosing terms or outcomes. As the dinar's revaluation becomes globally acknowledged, these private programs are expected to open more broadly, but still with limits. All 3 institutions are reportedly preparing for a Phase 2 rollout, which will extend exchange access to mid-tier clients and business banking customers, particularly those with verified holdings and financial portfolios. However, the banks are also taking extreme measures to avoid being overwhelmed. Appointments are already being scheduled weeks in advance, and some locations have reported full capacity for upcoming sessions. Online portals with pre-screening tools are being quietly launched for clients to request evaluation for eligibility. This controlled access strategy is in stark contrast to the flood of public interest now surging across the globe. Thousands of dinar holders are seeking confirmation, calling bank hotlines, visiting branches, and demanding details, often receiving canned responses or vague reassurances. This has caused frustration, confusion, and in some cases, panic. But according to insiders, this is intentional. Banks are determined to manage the rollout in phases to avoid logistical chaos, protect their infrastructure, and mitigate legal liability. It's also a way to ensure that only serious, well-documented holders are processed first, those most likely to become long-term clients, not short-term cash seekers. There is also growing talk of tiered contract rates being offered through redemption centers affiliated with these banks. In this system, clients may receive different exchange rates depending on the amount they hold, their willingness to keep funds in long-term investment vehicles, and their compliance history with the bank. For example, a client exchanging 1 million Iraqi dinars may receive a base rate close to $6.20, while a client exchanging 25 million or more could be offered a bonus rate if they agree to a 3 to 5 year deposit term with a financial advisor managing the funds. These offers are similar to structured settlement models used in private banking and hedge fund environments. The financial ecosystem that is emerging around this revaluation is unlike anything seen in modern currency history. It blends elements of traditional foreign exchange with high-end wealth management, global restructuring strategies, and strict regulatory oversight. It's a new hybrid model, one that reflects the magnitude of what's unfolding. Banks are not simply treating the dinar RV as a currency event. They are treating it as an opportunity to reshape client portfolios, build lasting relationships, and grow assets under management. Of course, with high reward comes high risk. Authorities are on high alert for potential scams, impersonation schemes, and illegal brokers preying on uninformed dinar holders. There are already cases of fake, exchange centers, being set up online, promising premium rates and instant liquidity. Law enforcement agencies and financial regulators are warning the public to verify all contacts, never send currency through unverified channels, and to deal only with licensed, U.S.-regulated institutions. The real exchange programs, those operated by Chase, Wells Fargo, and Bank of America, do not solicit business via email or social media, nor do they offer exchange services through mobile apps or third-party websites. Legal professionals are also urging currency holders to be mindful of tax obligations. A windfall of this scale can trigger capital gains taxes, income reporting requirements, and even IRS audits if not handled properly. Many of the banks have preemptively partnered with tax attorneys and CPAs to offer in-house guidance during the exchange process. Clients are encouraged to document everything, request itemized receipts, and keep records of original currency purchases to establish cost basis. Looking forward, the role of these three banks in managing the aftermath of the IQD revaluation is likely to expand. As demand grows and the process becomes more standardized, we may see the emergence of centralized redemption centers managed jointly by banking coalitions, supported by international compliance standards. There is also speculation that banks may begin offering IQD-related financial products, such as Dinar-backed bonds, managed portfolios, and even digital Dinar assets for secure long-term storage and trading. This is a pivotal moment not just for Iraqi Dinar holders, but for the global financial landscape. The revaluation of the IQD, and the unveiling of these secret bank programs, marks a shift in how institutions engage with retail and private investors alike. No longer is wealth management reserved for corporate elites or hedge funds. Now, through carefully orchestrated exchange programs, individuals who held belief, and held Dinar, are being ushered into a new financial tier. The takeaway is clear: this was never just about exchanging currency. It was about building legacy wealth, creating new financial ecosystems, and restructuring relationships between banks and clients on an entirely new scale. For Chase, Wells Fargo, and Bank of America, the future of banking may very well begin with a single note, one that once seemed worthless but now holds the power to change lives forever. Like and subscribe for more videos.